Hello and welcome to the LA Venture Podcast. We're David Waxman and Minnie Ingersoll, partners and investors at TenOneTen.
Today, I have Steph Janson from OCV with me. OCV is a $260 million fund in LA. They write checks up to $20 million into companies that have about $5 million in ARR. And before OCV, Steph was at OurCrowd, Israel's most active VC fund. Steph, thanks so much for chatting with me today.
Such a pleasure, Minnie.
You know, just to start, like $260 million fund in LA that wasn't totally on my radar before I learned more about it, I guess, as things go. Yeah, just give me the basics of OCV, I guess.
So, you know, when I joined OCV, and I joined fairly recently, so October of last year, I kind of started looking around for who are the big players in the LA ecosystem. I was new in town. And it very quickly became apparent to me, you know, this is a nascent ecosystem, and I didn't know that coming in, but it became apparent to me that OCV was one of the biggest fish in the pond over here. And, you know, I mean, here in LA, so we have Fifth Wall, who I think is bigger than us, and Upfront, and we have Greylock, but not many others, right? And so it's I think we have a better job to do in terms of getting our name out there, letting people know, hey, we're here, this is what we're doing. And I remember when you first came to meet us in our offices, we sit in this beautiful private equity fund, who's our sister company, and the chairman of our company is also the chairman of this private equity fund. So you walk in and there's these beautiful marble hallways and conference rooms everywhere. And you know, the first thing people often ask us is, who the hell are you guys and how come we've never heard of you? So yeah, absolutely. We this is one of the reasons why I'm out there doing podcasts and looking forward to getting the good message out there.
Well, it's Fund 1 right now, right?
Yes. Yeah. So we closed end of 2017 on a 260 million fund, as you said. We have about 15% fund cycling. So we could go up to about 300. And we've deployed just under a third of it. So we're 2/3 deployed, sitting on a lot of dry powder, which in the post-age of COVID, where valuations are plummeting everywhere, is a good place to be. We can talk a little bit more about that later if you want. But we're very much still active. We're looking for great investments. And we're here to play.
Awesome. So, I mean, both of those are interesting. Is Series B sort of your sweet spot entry point, or is it a Series A company?
I don't really know what a Series A and a Series B mean anymore, but as we define it, yes, we're looking for revenue generating companies around kind of the 1 to 5 million in ARR range. That's what we call a Series B. So there's product market fit, there's some validation, there's a little bit of growth that we can extrapolate on and try to figure out how the company's gonna perform in the future. And then we also will go earlier. So when we have a lot of confidence, we'll do a Series A.
Got it. And as you referenced, we are on video conference today. We're both in our houses. How are you guys feeling towards COVID? I mean, how is your investing being affected?
Yeah. Our existing investments, some of them are going to benefit. Some of them are going to have some hard months ahead. And we have to now, as VCs, start earning our management fees by doing some smart portfolio management and some good business development to try to help them get through this. On the other hand, valuations are plummeting, right? So there's going to be good deals everywhere. And a lot of the deals that we're seeing now are recaps or down rounds. And I think, you know, valuations have been just insane for the last 2 years. So I think now is really a time to be in. And historically, when you look at vintages, VC vintages that came following a global financial crisis, some of the biggest companies in the world were built around these times. So Airbnb was a 2008 company founding. I think Dropbox was founded 1 year before, and right as the global financial crisis was kind of coming to a head. You know, Scott Galloway, who hosts another podcast that I really love.
My Rival podcast? Oh, yeah.
Your Rival podcast, yeah. So the NYU professor who is always putting his foot in his mouth, but I love him. He makes this great point that, you know, these crises, they give managers cloud cover to make big moves. I think it's telling that Zoom is now worth more than all airlines combined, right? So we're talking on Zoom over here, and just to think that, I mean, that's the crazy world that we live in right now.
Wow, I hadn't heard that.
Right. So COVID is gonna affect the ecosystem up and down. You know, Silicon Valley Bank had a webinar last week where they made the point that in the last global financial crisis, investments dropped twice as much as valuations, right? And the reason that happens is because LPs start to bail. So, if you're sitting on a VC fund, your LPs are going to start calling you and saying, listen, don't make a capital call because please don't put us in a position where we have to say no to you. We can't actually go through with what we promised you. So, there's VC funds now who have dry powder on paper, and then there's VC funds now that can actually move the money and make investments right now. And fortunately, we find ourselves in a position where our LPs are pretty recession-proof. So, and by the way, that's also true for private equity funds and corporate development teams. Those with big dry powder are going to be making moves. The ones with strong balance sheets are going to be doing a lot of M&A, right? So there's going to be interesting landscape shifts in terms of how startups exit. So yeah, COVID is changing everything, and it's hard to know where it's all going.
Right. So you reference a little bit your LPs. You guys are you're investing out of Fund One, $260 million. That's a lot to raise for emerging managers. So tell me more about who's part of OCV.
Yeah, our largest LP is a group called J2 Global, which is a public listed company based here in LA, and that comes from one of our founding partners, Hemi Zucker, who was really the co-founder and the eventual CEO of J2 Global. And J2 Global is, pre-COVID, I think it was $5 billion market cap, about $1.5 billion in revenue, $500 million in profit, right? So big cash cow that is very resilient.
And it's here in LA.
And it's here in
J2
LA.
Is?
Yeah, J2 is here in LA.
So wait, it's what did you say? A $5 billion market cap?
Yeah. It was right before COVID. I'm not sure where it's at today, but yeah.
So it's got to be one of the largest tech companies in LA then.
Yeah. And so there's a registry of companies. Most companies that you think of as being based in LA, like Disney, are actually registered not in LA County proper. And I think in LA County proper, J2 I think is one of the top 5 publicly listed companies. So yeah, it's a large company over here.
And what does J2 do?
Yeah, so J2 is a company that they provide digital media solutions and cloud services and a range of different solutions. But probably the product they're best known for is eFax. So one of those, the first solutions that let you basically get fax in your email, right? Or send fax from your email. So J2 bought them and then scaled the company up. And they bought something, while Hemi, our partner, was CEO of the company, he grew the company by buying something like 160 different companies. Today, that's over 200, and basically merging all their customers list and merging all their overhead. So that makes more sense. They do a large range of things. Yeah,
that makes more sense than eFax being a $5 billion business right now.
Yeah. No, so they do a lot of things, and this also ties into kind of our value add offer for entrepreneurs. We, when we'll try to elbow our way into a competitive deal, we'll say to entrepreneurs, listen, there's this company, J2, they're our largest LP. They've made over 200 acquisitions. There's probably a customer somewhere inside J2. There's probably one of those acquisitions, one of those companies inside J2 that could be a customer, that could be a distributor, that could be a partner, or that could be an eventual acquirer for you. And so we use that very much as leverage to get ourselves into hard to get into deals.
Got it. And Hemi, who was the founder CEO, is now partner at OCV.
Yes, Hemi is now a partner at OCV, runs the team over here, runs the tech team in which I'm a VP. And that's about 2/3 of our fund is dedicated towards making investments in technology and prop tech. And then the remaining 1/3 of the fund is dedicated to making investments in life sciences, biotech, a bit of pharma, things like that.
Todd Gitlin and the team at Sapphire are sponsoring once again. They are the top recruiting firm in Southern California, but I swear they are worth getting to know even before you have hiring needs. They'll help you think through your hiring plans, and they have so much perspective to share on the LA startup ecosystem. Todd seriously knows everyone and everything, so worth getting to know him if you don't already.
Area number 2, where we can be smart money, anything to do with prop tech. And yes, this ties into our sister company, which is a large $30 billion focused private equity fund. Their assets include, solar parks, empty land, commercial real estate, car parks, multiple hotels, several data centers. And so when we look to make an investment in prop tech, the first question we have is, how can our sister company add value? Can we roll this technology out through their portfolio in order to give our startup some kind of unfair advantage? So, for example, that could be, and we use the term proptech very liberally here, right? So that could be, for example, a sensor for a smart building. That could be, 3D printing for construction. It could be new construction materials. But if our sister company could be a user, then we can do something really cool. We can, on day one, say, hey, listen, give us a sweetheart valuation because we can arrange you this amazing side deal. And then on day two, we can immediately mentally mark up the valuation that we assign to the startup because we know that the startup is going to hit all of its milestones for its next 2 financing rounds because we're going to be the customer, right? So that lets us kind of play very aggressively in that area.
And that, what did you just say, $30 billion PE fund, are they based in LA as well? And that's their headquarters that I've been to?
Yeah, they've been to LA. That was their headquarters.
And as OCV, do you have a philosophy about your geographic focus?
So we are, I think, about 50% deployed in LA and 50% deployed outside of LA. We tend to focus on US-only companies, although a few of us at OCV, myself included, are Israeli. So because we know that market very well, and we feel very comfortable investing in Israeli companies who are kind of onshoring onto the US and setting up offices over here. But that's just a little bit of a quirk that comes from who we are. So anyway, just to finish your previous question, Area 3 is around anything to do with life sciences. That comes back to one of our partners who's a very experienced life science entrepreneur. He was the co-founder, you're of the right age to remember those I fell and I can't get up life alert ads, infomercials. So he was the co-founder and managing director at Life Alert, and also the CEO and board member of multiple publicly listed companies. And also we've hired a team that brings a lot of that knowledge in-house. So we have 2 PhDs on the team, one a neuropharmacologist and one a biochemist, who are helping us kind of do prospecting and in life science deals for biotech and pharma and some digital health as well.
Got it. Okay. So those are the 3 areas of focus, but then your website says OCV invests in, owns and operates, differentiated companies with differentiated technology.
Right.
And so that is actually fairly different phrasing than most VCs would talk about their funds. Can you explain that difference?
Yeah. So we are, we have those 3 areas where we feel like we can be smart money, but we're also kind of first and foremost opportunistic, right? So when we see the opportunity to go outside of those 3 areas, right, and invest, like I said, not in a Series B, we'll do it. When we see the opportunity to make an investment through venture debt, we'll do it, right? And in one case, we saw a gap in the market and we incubated a company internally and we own 80% of it. Right, so we are a majority owner in this company, and so by definition, we own and operate that company. In many ways, we'll also break the VC rule book when we feel like it makes sense to do that. So that's kind of something that's a little unique to our fund.
Cool. How did you? I know you were at OurCrowd in Israel before this. How did you end up at OurCrowd?
Okay, so crazy story. So I was traveling home on a flight from Israel to New Zealand. So I was born in Israel. I'm Israeli, but my parents moved to New Zealand when I was 12. Long story, we all collected 5 passports along the way. We all speak multiple languages. My parents speak 5 and 6 languages each. And so anyway, I was flying home to visit my parents, and I am sitting on the plane next to this guy who we get talking, and he always said to me, listen, if you're ever in Israel, look me up and I'd love to grab some lunch. So we stayed connected over the years. And a few years later, I find myself in Israel and he says to me, listen, I'd love to introduce you. You have this interest in startups, right? I'd love to introduce you to my friend, Alan. And so I'm making an appointment for you. Just be at this address at this time, right? And go meet Alan. And so I show up at this house, but this house is it's like this mansion in the middle of Jerusalem in a very expensive neighborhood. So straight away, like this guy is someone. And big walls and cameras around the house. And he opens the door for me. And as I'm walking in, I get a call from my friend from the plane who says, listen, I can't be there. Meet this guy. It's going to be fine. So this guy leads me into his office, which is a few stories underground. And as I'm walking downstairs, behind this tall wall, I started wondering myself, how well do I know this guy who I met on a plane, right? I mean, like, is this where they harvest the organs, right? Like, that's kind of what's going through my head. And anyway, he asked me, what's your name? And I say, I'm Steph Itzikson. And he says to me, Itzikson, I know that name from somewhere. We were the only other Jewish family on the same street in Johannesburg, South Africa. And he goes and he names my aunt because they went to high school together. He, being religious, kind of takes it as a religious sign and says, okay, it's I got to help this kid out. Unbeknownst to me, he was the largest LP in OurCrowd at the time. And he picks up the phone to the CEO of OurCrowd, John Nedved, and says, you got to interview this kid. That's how I got the interview.
That's amazing. It was a sign.
It was a sign.
That's a great story. I ask a lot of people this question, and most people have, they started investing in syndicates or something far more mundane. That's awesome. Okay, so OurCrowd is the largest, most active investor in Israel. Tell me a little bit about OurCrowd.
Yeah. So, I mean, it wasn't when I joined, I guess I should say, So when I joined, we were a scrappy little team, under 30 people. But over the time that I was there, it grew to about $1.5 billion deployed today. So I should take a step back and explain. OurCrowd is what's called an equity crowdfunding platform, which means that there's a website where you go to sign up as an investor. You have to be what's called an accredited investor. So you have to prove $1 million in liquid assets. And then once you join that list, you can go into the back room and see all the deals that OurCrowd is currently raising for. OurCrowd puts up about 5% of the value of the deal from the money of the partners who created the fund. And then they crowdfund the remaining 95%.
But it's sort of similar to AngelList?
Yeah, similar to AngelList. The big difference between AngelList and OurCrowd is that AngelList is uncurated. So anyone can go onto AngelList and say, this is who I am. Here's the deal. So OurCrowd, the big differentiator is that it's a curated equity crowdfunding platform. What that means is that there's a team over there of investment professionals. They do institutional great diligence, right? So that's something that an individual who's syndicating a deal on AngelList would struggle to do. They have a team of in-house lawyers who can do legal diligence in a way that it would be very difficult for a single person to do as well. By the way, I should say also that today OurCrowd is no longer solely an equity crowdfunding platform. So today, OurCrowd also has got traditional funds, which it raises, right? So it raises the fund with a specific management team. It has a beginning and an end date and a deployment period and all that. And then OurCrowd also at some point started seeding other VC funds.
And there's been a lot of, people trying to sort of study Israel to understand what has made it such a startup success story.
Yeah, for sure. So maybe just to give your listeners some data points for people who are kind of not familiar with this. So it has almost twice the VC dollars per capita than the US, right? And has more R&D per capita, highest R&D per capita, non-military R&D per capita in the world, actually. So these are both VC-funded companies and other companies' R&D departments when you add that all up. Highest number of patents per capita in the world. And then when you look at NYSE and NASDAQ listings, right, this was true a few years ago. I don't know if it's still true today, but the US tops the list, which makes sense, largest economy in the world, followed by China, which is the largest population in the world. Then comes Canada, which punches above its weight. But then in fourth place is Israel, right, which is insane, right? Because this is in absolute terms, right? The most number of NYSE and NASDAQ listings in absolute terms is this tiny country with, just over 8 million people in the middle of the Middle East, right?
What attributes to all of that success? And I've heard people say things like the Israeli mandatory military service, but I don't necessarily understand the tie between mandatory military service and why you have so much success in all of those different industries.
Yeah. So let me see if I can make that tie for you. So what is the military, right? Vis-a-vis investments, at least, right? And vis-a-vis innovation. Well, the military is an organization that can make extremely long-term investments in research with no ROI considerations, right? They're not beholden to any LPs. So they can say, listen, we want to make an investment in nanotech, right, over the next 25 years. And it doesn't really matter to us whether it's going to be profitable or not. We're doing this for a strategic reason, right? So that definitely helps kickstarts industries, right? Then the industry is also plays a big role in talent, right? So this one phrase that gets thrown around is that in the Israeli military, you're trained to work in teams to accomplish mission critical objectives while adapting to unknowns. So let's break down each of those things, right? Okay, so you're trained. You go into the military, you're a 19-year-old, and you're trained to hack into a Syrian computer, right? That turns out to be quite useful when you then later go on to found a cybersecurity company, right? You're trained to work in teams. Okay, why is teams relevant? Because as it turns out, many startups, right, 500 startups did this research that showed that many startups fail because of founder infighting, right? But if you're founding a startup with someone who you served in the army with, right, they're a known entity. They're already someone, you've already been through a lot with this person. You probably already know what annoys you about them. It's a known risk, right? So your chance of just kind of like discovering something about this person that makes it intolerable to work with them is much lower at that point. And then that last bit, adapting to unknowns, that transfers very well to startups where everything is just chaos all the time. And that's true, by the way, even if you are non-military, right? So if you're an Israeli population, every few years you come under fire, right? There's like rocket attacks that happen in Israel. And so by comparison, the idea of failing in business seems a little, I guess, trivial compared to living in that reality. And whenever I go down this line with people, by the way, I always kind of feel responsible to sort of plug Israel and put things in perspective. So, the risk of terrorism in Israel is negligible compared to the risk of getting on, in your car on the road here in LA. But so that's just kind of worth throwing in there as well. And then, back to kind of the military. So necessity absolutely breeds, some innovation, right? So using the satellite industry I was talking about before. So satellites are typically launched from west to east, right? And the reason is because the Earth rotates in that direction about 1,000 miles per hour. And when you launch satellites with the rotation of the Earth, you give them that boost. But in Israel, if you launch a satellite west, you hit a problem because that satellite is going to fly over Iraq and Iran and Syria. And there was a fear that they would shoot this extremely expensive piece of equipment down. So what was the innovation? And I said, well, what if we can miniaturize this to the point where we can actually launch it westwards, right? We can launch it against the rotation of the Earth. And the whole CubeSat industry basically came out of that. And now you can actually launch a satellite in Israel for about $100,000. That's less than the cost of developing an app. And that's true in non-military situations too, right? So Israel is a place with water security issues. So it's huge innovation in, for example, water desalination in Israel or in water recycling in Israel, right? Like Israel recycles over 80% of their water. It's the highest in the world, and the next highest country in the world in terms of recycling, I think, is Spain with something like 11%. I think today also when you look at Israel, it's easier to explain why, right? So today if you drive from Tel Aviv up to Haifa, you see parks and parks of, tech parks. So Google, Yahoo, Intel, they all have huge R&D offices over there. And all those, are producing great, talented engineering workforces for the startup nation. And then the presence of those large companies that we talked about is also very important for the creation of startups, because there's this cycle that I like to talk about. I used to lecture at the Technion in Israel as a guest lecturer, which is kind of the Israeli tech, Caltech, right, or MIT. And I used to make this point that what happens in these large companies is you join as an engineer, they train you. Then one day you see a problem which you really want to solve. You go to your boss says, no way, I can't help you with this. You have your own KPIs and I need you to meet these timelines. So then you as a budding entrepreneur, a budding engineer and entrepreneur say, okay, I'm going to leave and do this myself. So the large company is needed to train you. The bureaucracy of the large company is needed to frustrate you into leaving. And then once you've created your own startup, the presence of a large company is necessary to be your eventual acquirer. And then the last element of that is cultural, right? So culturally speaking, Israelis are, notoriously informal and disrespectful of authority and hierarchy. And then I would say culturally, also openness to immigrants, right? So Israel in the 90s absorbed something like 1 million Russians, which, to put that in perspective for the listeners here, that would be as if the US absorbed the entire population of France. So, I mean, like that's just inconceivable in the US today. And then the last thing I'll say is that being a small country also means that you have to think global from day one. Pretty much from day one, you have to start asking yourself, how do I move to the US? And so that already just kind of, it's part of the machine over there, which makes you think big before you even get started.
What do you notice? So you have lived in a variety of different places. What do you notice about LA culture, sort of in contrast to the Israeli culture?
Yeah, I've been very pleasantly surprised with the LA culture. And LA has, I guess, this like stereotype for outsiders, right? LA's mostly associated with Hollywood as opposed to being associated with tech and venture and investments. I guess I fell into that trap of judging a book by its cover, but I thought most people in LA would be kind of like very vain, but I'm very pleasantly surprised to find that the LA startup ecosystem, in my opinion, actually resembles what I would imagine the Israeli ecosystem looked like in the 80s and 90s, and that it's kind of like, it's a little grungy. It's got like this big brother up in San Francisco that gives it a bit of a noogie every now and then. But I think that LA, right, if I look in the long term, there's nothing stopping LA. And if I look at the fundamentals, right, LA seems very well set up to become huge. I mean, if you believe demographics are destiny, right, the population in LA is much bigger than the population of San Fran, right? I think in the next few decades, I think this is a great place to be in, and I'm excited to be here while it's early so that I can grow with this ecosystem.
Great. Anything else on the personal side? Sometimes I like to ask people for like a piece of advice that they've been given that has touched them, stuck with them.
Well, so for me, I like to tell people, if you want to be in venture capital, one of the things kind of that's important to realize is that venture capital is this really weird place where people's careers just kind of get on rocket ships and take off. For example, you fund these entrepreneurs back when they're these, little scrappy kind of jeans wearing, I have a dream kind of people, but then they sell their company for $500 million. And suddenly this person who you knew is worth $100 million. And, you work with these extremely capable people, right? So for example, as I mentioned, one of the partners at our fund created a $5 billion company. Yeah, one of the other partners at our fund is a billionaire, right? So you have to absolutely know how to manage your ego so that, you don't kind of get drowned out by all this like talent around you. So I would say that's kind of one piece of advice that I give people who are trying to get into venture.
Great. Well, it's really good to get to know you and get to know OCV better. As I said, I will be sending you all our companies as they grow into their Series A, Series B. Great. Well, Steph, thanks so much for chatting with me today.
Such a pleasure.